Welcome to the Real Freedom Podcast, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. Welcome, everybody, to another episode of the Real Freedom Podcast, where we talk about building time and financial freedom through opportunities in real estate. And today we are going to talk about being able to do your day job as well as kind of transition into real estate syndications, raising money for syndications. And so today we've got Jarod Alexander here. Jarod is the founder of Optimal Equity Group and was formed to help investors educate them on achieving strong returns. And you work on vetting opportunities for investors, doing capital raising for projects. In addition to that, you also are a limited partner investor in 5 different syndications totaling 1,100 units, and those are in Phoenix and Dallas. In addition to that, you work in sales and you are with your family in the Phoenix area with your wife and 2 kids. We'll just go ahead and kick it over to you, give you a chance to share a little bit about your background, getting into real estate, doing it on the side, transitioning and how that process has worked for you. So welcome, Jarod. We're so excited to have you.
Hey, thanks, Mike. Thanks for having me. Excited to be here. As far as getting into real estate, I kind of went back a little bit. I come from a family where my grandfather, I saw him retire at the age of 50 years old, and later learned that he bought the property, started a business, but brought the surrounding property around that. And I ended up coming out here to Phoenix, Arizona at the age of 50 and just lived off the passive income, right? Mm-hmm. And so as a young kid, that kind of got my eyes opened, to the world of real estate. But, of course, I was going through school and still had that mindset. I was working on, all right, get a 401k, get a job, put it in there, and retire at the age of 65, right? Was kind of the mindset I had. And then I ended up reading that what they call that purple book, Rich Dad, Poor Dad, which is not even a real estate book, right? But it totally shifted my mindset and opened my eyes to, again, this world of real estate, passive income. Mm-hmm. And then, eventually read that book, The 4 Quadrants, right? Where you got this self-employed or employer, self-employed, business owner, and then investor, right? And so, of course, reading that, I quickly wanted to be on the investor and business owner side of that. So anyways, fast forward, I'm originally from North Carolina. So moved out here to Phoenix about 8 years ago, almost 9 now. And ended up meeting my wife, had 2 kids. And, I come from a flooring background, which is the company my grandfather started back in North Carolina. And I kind of had the idea, like, I'm just going to maybe own a flooring business and kind of go that route. But once I got to real estate, had a family, it's like, well, no, I want to create this passive income because I'm in flooring sales for my day job. And, with me, when in sales, I'm 100% commission, right? So I get hurt, something happens, I want to take a vacation. Well, it's nice, but I'm not making money, if I'm not working, right? And going on appointments and doing sales. So the income, just creating this passive income, which started in single family. I started going to some local ASREA groups. Mm-hmm. They told me network. I had a mentor in this space that I was kind of following his coattail, actually still am. And, he's, got me to some at the local ASREA meetings, what they call it ASREA here in Phoenix. And mm-hmm. And so started networking.
And that's I'll just quick add for those people that don't know. So it's REIA, Real Estate Investor Association. And so, each state will have one. So finding your local chapter is really a great way to build some good connections.
Yeah, absolutely. Yeah. And a lot of times they just put it, so like AZ, for Arizona is why they call it ASREA.
Yep.
So thanks for clarifying that, Mike. And again, if you go on meetup.com, right, there you can find tons of different meetups. REIA is definitely a big one that's a lot of people are familiar with, but there's tons of them, that you can go and get educated and learn how to, start this process and network with people who are doing it. And so, so me and my wife, we kind of were figuring out which way to go, landed on single family. This was probably about 3 years ago when the market was just really hot. It was, again, in Phoenix, it was hard to find something to pencil. So we started looking out of state. And the goal was to go out and buy about, 50 or 60 houses, right? To replace my W-2 income. Because of course the goal is time freedom, right? I want to buy back my time and be able to have the option to do what I like and not have to go to work if I don't need to, or if I get hurt, just have those options, right? And so anyways, we bought this out of state single family in Kansas City, Missouri, right? Never seen it, never, there was from a turnkey property company where they sold us a property and had a tenant already in there. And so all we had to do was, get it under contract, complete everything. And then, we were cash flowing, from day one, really, until, this was a 1920s house. So first house I ever bought, Mike, I myself, originally house I'm living in now, my wife had already had. So anyways, so I'm negotiating all this stuff. I'm acting as the realtor, so to speak. And, it comes back on a 1920s inspection report, right? Mm-hmm. And so anyways, navigating all this, and 2 weeks after we get that under contract, the sump pump breaks, and, need to go and replace the sump pump. So anyways, needless to say, a lot of learning opportunities along the way. But what that did is it got us over that threshold. It just, all right, and once we got that under, closed, that deal closed, I wanted to just, all right, let's go out and buy 50 or 60 more. All right, let's keep this momentum going, right? And so we started looking at options, and we put in a lot of offers. I was looking at some duplexes, fourplexes, just things that we could, just kind of keep, accelerating our path there. And nothing was working out. It kept getting overbid, because of course the numbers got to make sense. You want to, for those, I'm sure a lot of your listeners know this, but you want to take, the income the property is producing minus all the expenses, and what's left there is your cash flow, right? Which you're really on about $150, $200, a month, where the market was in 2020, 2021. Is what we were finding. I mean, sometimes you'd find that deal, needle in the haystack, but for the most part, that was it. And so a lot of these times where people kept over, just coming in with these cash offers, $20,000, $30,000 above asking, it just didn't make sense. So that led us to look at, the beautiful thing about real estate, Mike, is you have so many different streams you can go down, right? We were talking about this before, flipping, multifamily. And so once I kind of discovered multifamily, ended up going to another meetup, which was multifamily based here in Phoenix, and started learning about apartment syndications, benefits of that. And I learned that I can, on this house I bought in Kansas City, Missouri, we probably put a little over $20,000 down, with some repairs and the down payment and all. It was about a $75,000 house when we got it. So, I can put my first investment I did in an apartment syndication, I could put $25,000 down, generate about close to the same amount of cash flow, maybe $100, depending on how the deal is structured. And I'm literally done after I wire that money, right? Yep. No call about a sump pump, no call about the tenants, property, the power going off or anything, which we did get that call in the middle of the night too. But so anyways, that accelerated this path of going down apartment syndication, which a lot of people don't even know what that means, and honestly, I didn't until I went to that local meetup that one day. And it's just not, what people talk about like they do the stock market, right? I mean, and it's just a non-diversified, it's just a lot of people don't talk about these alternative investments you can go down, so all you hear stocks, crypto, bonds, treasure, and so, once I learned about this, I'm like, well, I gotta let once I find something I believe in, I'm telling everybody. I'm the guy that's shouting it from the rooftops. And so anyways, that led me into creating my business now, Optimal Equity Group. So after, fast forward, I invested in 5 more syndications and, just recently created my business to help others achieve their financial goals and accelerate their retirement plans. So,
yeah.
yeah.
Well, and I think a key is, like you said, there's so many different things that you can invest in. And yeah, a lot of people tend to naturally think single family to start, then maybe move up into multifamily, and then maybe move up into larger properties. And with real estate syndications, you kind of get the best of both worlds. You can you can invest the same amount of money, skip over the late night toilet calls, that sort of thing. Because yeah, if you don't have a property manager, you are the property manager. And in a syndication, because the way that it's set up, everybody has their role. And so you can put that amount of money. And for some people, it might feel like it doesn't seem real, right? Because you're not like looking at the property, screening the tenants, making those late night calls. But you kind of get the benefit of the economies of scale because yeah, if you're investing in a 100-unit property and you've got a vacancy, 99 people are still paying their rent that month. If you've got a single family home and you've got a vacancy, 0% of the people are paying their rent that month. And so you get the economies of scale. You don't get the hassle of the late night toilet or late night power outage or, heat off, something like that. And you still get the upside, the financial upside of investing in, a property that's going to have great returns.
Yeah, absolutely. And I'm glad you touched on, like the vacancy part, right? Because part of really what drove me into real estate to begin with is just brick and mortar, right? I got a tangible asset. I can see, touch, feel, right? And, with multifamily, especially, because single families, I think it's great. Honestly, going where the market's going, I may capitalize on some opportunities that may be coming up there. But, if you got one tenant and that tenant's not paying rent, well, you're not getting any income that month, right? So back to your point of if, I got 100 units, I got 5 people not paying rent. Well, I'm still 95%, or 90% occupied, I'm still getting paid, right?
Yep.
I'm still getting paid. And so, but even to that point is, recession resistant assets, right? Is like the stock market and everything, whenever I invest money into that, one tweet could tank a stock, right? It's like money just floating in thin air. Like,
you're not sitting on the board of those companies helping to influence the decisions that are being made.
Absolutely. Right. And so, this is what makes me feel comfortable with putting my money because, I honestly have a lot of my portfolio now invested in real estate, specifically, these apartment syndications. And I got a recession resistant asset. People need a place to stay. So like in the economy we're kind of in now and going a little deeper into, like if people can't afford rents, and for a single family or can't afford the mortgage, well, they might have to sell their house and go live in an apartment, right? Or, and the apartments I invest in are typically not type, class A, not saying those are bad, but for me, it's just workforce housing, right? And so, people still need a roof over their head. And then I like also that it's not factored on what the comps in the neighborhood, the single family homes, right? I mean, apartment complexes are valued by their, by the net, the net operating expenses or the net operating income. And so they take, again, just like, the cash flow, right? You take all your expenses minus, your income. Well, that's what you got left. And these companies are essentially flipping, or the companies I partner with are primarily value add, which, we can go down that road, but there's some different types of syndications, apartments. You can do new build, new development. But the ones I focus on are value add. So just to sum that up, real one sentence, it's flipping apartments, right? So they're just going in there creating, upgrading the units, adding parking structures, pretty much just increasing the rents income they can get on a property, which forces that appreciation. And so that's a big reason why I'm a big fan of them.
Yeah. And just to to quick touch on that point, like you mentioned, for people out there, if you're not in real estate, or you're maybe on the residential side of real estate, when we go to value properties as realtors, right, single family or kind of under 4 units, what we're doing is we're going and looking at comps, seeing what else has sold in the neighborhood, and then saying, okay, is my building better or worse than these other comps? And that's how I'm determining my price. When you get into the commercial space, it's valued based on, it's income, expenses, and net income is really kind of what those key factors are. So if you find ways to increase income by updating units, bringing units up to market rent, that sort of thing, you find a way to decrease expenses. Maybe you're looking at, passing utility costs on to the tenants, that sort of thing, doing some sort of rubs, is what it's called. Or, just finding a way to increase that net income. You're in control of the value of the property, not in a way that that you would be in kind of the under 4 units, because if somebody sells a house for a really low price, that affects your comp value when you're looking at smaller units. But here you're in control of the value of your property. And that's why a lot of people love the commercial stuff as well. Because like you said, you're in control of the value of that asset. And so the value add piece is so important. If we go in and we flip that apartment, increase the rents, decrease our expenses, now that asset has a lot more value and you can sell it, and you're not worried about what the building across the street sold for.
Right. Absolutely. Well, and two, piggybacking off that is, now, okay, you got this apartment complex and it's, cash flow on property, but also you want to look at, when you are investing in these types of deals, is what market they're in. Right. So like for me, I'm primarily in Phoenix, in Texas area. So Dallas and Houston are kind of my main focus right now. And they're just hot markets. I mean, population growth, job growth, just want to make sure you touch on the unemployment rate, and then a lot of times too, when you are looking, so, okay, say you find an area, well, even in Phoenix, you got South Phoenix, where it's a bad part of town, or you can do North Phoenix where it's a little bit better part of town. So you definitely got to comp the area too, or do your due diligence. But when you're looking, so look at the big box players, right? Like Target, Starbucks, McDonald's, right? They do their market research whenever they're, going out and figuring out where they want to build, have their business located. So those are good telltale signs too. Okay, hey, I'm right next to Target, Walmart, all this, good business area here where there's jobs for one, it's driving in people, typically located by highways or freeways or wherever market you're in. So yeah.
I was going to say, I had there's a business that I heard of in the past where literally their strategy is they put a building within like a quarter mile of a Starbucks, because they know, like, based on what their business was, getting that foot traffic into Starbucks is naturally going to lift their business, And so funny that you just mentioned Starbucks like that, because that stuff's important. But yeah, in terms of syndication, you guys really are looking at macro factors in the economy, because if you're purchasing, 1,000+ unit buildings, this isn't just, you're really looking at, okay, what's the next 5, 10, 15, 20 years of this community going to look like? Not, hey, can I sell, can I, buy this property? Is it going to be good enough for a couple of years? But you really are looking at the macro factors of the city, the unemployment, the job growth, that kind of stuff to decide which communities you're going to invest in.
Yeah, absolutely. Well, and to that point too, because these aren't like your typical flipping a house type of investment, right? Where you put some money in, 6 months later, you pull your money back out after a sale, right? I mean, these are 3 to 5 year holds. So you want to make, kind of look in the future there and kind of see where's this market going to be. And And really, as an investor, from the investor point of view, as far as your dollars go, is just make sure, hey, this is an illiquid investment, right? It's not like the stock market where it's more liquid. If I want to sell, even if it's for a loss, I can pull my money back out, right? So, typically on average, these are $50,000 minimums, that to park your capital in. So you got to know in 3 to 5 years, you might not get to see the return on that capital. Besides a lot of deals, you may have cash flow depending on how it's structured throughout, but the majority of that, that capital isn't going to be returned until the deal sells.
Yeah. So. And that is, I wouldn't say it's a strong negative, but that's something to think about when you're placing your money in a syndication versus doing your flip is, you're in control of the terms when it's your asset. Hey, something came up. Now's a good time to sell. Let's go ahead and sell. You're kind of turning over that power to the people that are managing the asset. And that's where something like a self-directed IRA would be a good opportunity to invest in, because with that, you're not going to see that cash back within 5 years anyhow. And so that's where something like that would be valuable, because, hey, we invest our IRA money from a self-directed IRA into it. 5 years, you sell it, you do a 1031 exchange, flip it into another building. And then when you're ready to use those funds at retirement age, great. But you're not concerned about, hey, we want to go do this thing next year. We want to go buy a boat. So we need our money liquid to be able to go do that. That is something that with a syndication, you just don't have that same control and power over those decisions like you would if it's your own property.
Yeah, and absolutely. And thanks for mentioning that too about the, self-directed IRA, because that's actually how I did my first investment through a, syndication. Is, I took a third party company, what they call a custodian, and I invested, did my first deal in that. And honestly, I don't really look at it as a negative at all. You can see 3 to 5 years, but if I can just compound that, and once these deals go full cycle, and who knows, depending on the market, I was seeing deals, a year ago going for 14, 18 months, term. So it just all depends on where the market's at. But, just to say 3 to 5 years, my money can keep compounding. And essentially I'm doubling my money, say every 5 years, right? In 10, 15 years, once I start pulling this equity back and then I reinvest, 200 turns into 400, 400 turns into, 800, 800 turns into 1.6. Those are some exciting numbers to look at, a little down the road. And really it's not the get rich quick scheme, right? But it's, for me, it's solid investments, again, tangible assets that I can put my money in, let my money work for me. And again, I am producing cash flow, throughout the hold period too. So I like to invest in assets or syndications that are paying me monthly distributions. And some of it, definitely depending on ones you find. Some would offer a lot better cash flow than others, right? And keep in mind, it depends on when they do the business, what the business plan is, but sometimes it takes a while to get to that cash flow until they start renovating some units. So, but no, absolutely. Just the compounding effect is huge,
Yep.
Yeah.
And I think, one thing that's really important is buying into, it's really executing a business plan, right? And so it could be, if you're looking at value add, like you said, flipping apartments, you might be, flipping so many units at a time. There's going to be some vacancy there. It's going to be an expense to be able to pay for those renovations happening. Then you're going to place tenants at new market rents. So yeah, it might take some time for that cash flow to build up, kind of depending on the property. But so you're going to want to see that. And yeah, you're looking for, does this investment fit with what I want to do? But you're really putting your money into people. Is this somebody that I know, like, and trust, and they're going to be able to execute on this strategy? Because you're saying, here's where the property's at now. Here's what the property is going to be in the future. Here's what we're going to do to get it there. And are you in? Are you in for that amount? And so you have to know that person knows what they're doing, and you trust them to be able to get your money back. And
yeah,
more.
Yeah, it's kind of what that's saying. You're betting on the jockey, not the horse, right? Because anybody can go out and find a good deal, right? But how you manage that deal, really, asset management can make or break a deal. You can turn a good deal bad pretty quick if you run it down and not taking care of your tenants and things, repairs and things that need to get done and that's mismanaged. So yeah, absolutely. No like and trust. That's for sure. Yeah.
Mhm. So talk a little bit then quick about, how you're helping to raise capital. So, you've put your money into some deals yourself. You've talked a little bit about kind of the communities that you're focusing in and why, but kind of talk about that capital raising piece.
Yeah, no, good question. And especially, so again, going back a year, I mean, this was everybody was, this was very attractive, right? Seeing deals turn 18 months, you could double your money. Well, now in that, economy we're going into now, and kind of the uncertainty, as people are definitely a little bit, reluctant, to put their money, especially in these longer, longer holds. And so like I said from the get-go, Mark, I find something I believe in, I want to share it with everybody, just kind of like in sales, I got to believe in my product, right? To be able to be successful at selling it, right? Because the goal is I really want to help other people grow and accelerate their retirement plan, and just have a different mindset around, you don't have to be 65 to be able to just retire and do what you want. You can create this income along the way and create a lot of freedom. And it might not be in 2 years, but it could be in 5, 10, 15 years, right? And so anyway, so as far as how I'm going out and raising capital, of course, I'm talking to family and friends about this, right? Just telling everybody in my network, but I do go to networking events. I'm part of a couple communities where, I'm part of this one community. It's where a lot of entrepreneurs are. So, they're out there. Most people own their own businesses. So they're trying to promote their stuff, but at the same time, looking to place capital. So just, letting them know of these non-alternative investments and yeah, BNI is a great, a great source, to look for, just possible investors and yeah, I mean, really, it's just talk to everybody, I mean, you hear about people talk about the Uber you get in, create a conversation, on the way to the airport or something. And believe it or not, a lot of Uber drivers are entrepreneurs, right? So, you get to conversations like that and just really telling everybody, about what you're doing, and I really think if you go in it with a heart of how can I help this person, right? Then a lot of people see that. And, again, you got to build that know, like, and trust factor, right? People aren't just going to hand you over $50,000. They got to believe in you, believe in what you're, presenting to them. And also, of course, show them the deal and, the returns on that. So,
yeah.
Yeah.
And another thing that's great too, you had mentioned, entrepreneurs and they're building their own businesses and finding people that are a good fit for your investment. Entrepreneurs, business owners are great people because they want to spend their time growing their business. They don't want to spend their time learning about real estate, finding good properties and what to do. And so that's where it really creates a win-win scenario where they're looking for places to put their money, but they don't necessarily have the time or the capacity to go learn that and figure it out. And yet they might have a lot of money. And so this is an opportunity where you can leverage people that are busy professionals earning good incomes in their day jobs to be able to place it into real estate and put it with professionals that do a good job managing real estate assets. And so that's creating a really good win-win situation, is finding those entrepreneurs, established professionals that are like, hey, I'm busy. I've got my job is taking a lot of my time. Maybe I've got family taking a lot of my time. I just want to know that my money's going to be in a good, solid investment. Please take it. I don't have to worry about doing the flip myself, hiring the contractors, playing GC and property manager. I can just put it there and know that it's going to grow. Like you said, double in 5 years, double in 18 months.
Yeah, absolutely. Absolutely. And to that point, I remember just even going, and I always know I wanted to be and play an active role in real estate. I have a passion for this and I just love this, but, even beginning, as far as like finding a single family, I mean, just taking the time to source through all these deals to find this, putting it, offer on this. And I mean, it took so much time to do that. And I'm like, once I heard of apartment syndicate, I'm like, I can just spend 2 or 3 hours, have a conversation with the operator, look at the deal, make sure all my questions are answered, feel comfortable, and then bam, I'm sending the money.
Mm-hmm.
Right. And so to your point, I mean, people are busy. They don't want to take the time to do this, so yeah, I mean, it's definitely a great opportunity to park some capital for sure. Yeah.
The last thing that I wanted to poke on was actually something that you said really early on, which is, your first property had some challenges, but you said you wanted to get over the threshold. And I think that's what holds a lot of people up, is this paralysis by analysis. I'm going to spend, years learning about real estate, but I'm never going to get over the threshold and do something. And, you probably would have done your second property in single family different than your first. You would have asked different questions. You would have also gone into it with more knowledge because you've done it before. And then you're getting over the hump and getting over the threshold of placing your money in a syndication. And so I think for a lot of people, real estate is risky, just like other assets, but at the same time, you can't get to better until you start. And so you've got to just get over the threshold, get started. So yeah, if it's a single family, if it's a syndication, you can't just keep sitting on the sidelines, and you're going to get better. You're going to ask better questions. Even in syndication, if you decide to skip single family, multifamily to begin with and just put your money in a syndication, that may be a fantastic one, or you might find a different one or something that fits your needs better the second time around. So you're going to learn and grow, but you can't get to your second syndication until you get to your first, and you've got to get in the game. And I think that's what hinders so many people, is they're so scared or so risk averse to lose money or to have something bad happen. But like you said, you could invest your money in a corporation, and one bad decision, one bad tweet, and that stock price falls by 30%. And now you've lost 30%. And so are you going to lose 30% in a real estate investment? That's a lot harder to do because it's tangible. You can put your hands on it. And yeah, you might have a bad tenant, but you can replace that tenant, And so I think that's where sometimes people don't get in the game. Just get over the hump. You got to get into the game to get better at it.
Yes, definitely. And you brought up a lot of great points there. One, it reminds me of my favorite saying is education plus action equals results, right? And, you have to educate yourself. And I honestly went through probably about a year, maybe a little under, but, educating myself around this, and it was scary. It was like, oh my gosh, what are we doing? And it was like exciting when I would get something under contract, but it was scary. It was like, oh my gosh, what do I do with this? Right. But, you learn along the way. And, again, I learned more probably in the 3 weeks, I was under contract on that single family home, right, than I did probably in the past 9 months, trying to educate myself, listening to podcasts and stuff like that. Because, I mean, all this stuff is great, but you don't really know until you get into it, right? Mm-hmm. And what I would say is, like if you are going out and you are at that stage where you're, just looking at getting in the game or buying that first single family, is just look at the number. The numbers don't lie, right? Somebody told me earlier on, take the emotion out of it, right? Which is honestly easier said than done, because I don't care who you are. I mean, if you get something under contract for your first time, your first investment, there's going to be emotion around it. But if you have a spreadsheet with all the numbers saying, all right, after all my expenses, everything that I have to fork into this property and the rent I'm going to get on it, am I cash flowing, right? And that's what matters. Okay, if I am, yes, let's put put an offer on the deal, get it under contract, and see where you go, right? Mm-hmm. And you may be able to negotiate a better price. Sometimes it's like getting a fish on the hook, right? Get it on the hook, you might be able to work a little bit more too. So, anyways, yeah, that was huge for me, and yeah, I mean, it's got me to where I'm at today. And honestly, now I need to upgrade my bio there, but I'm in just invested in my sixth limited partner deal, my sixth syndication, and just still taking those steps, right? And
Mhm.
they talk about the small wins, right? There's this book, I'm going on, but the gap in the game, and pretty much to sum it up is just looking at the wins, right? Instead of not of what I'm not doing. Stop looking at what I'm not doing and look at what I am doing, right?
Mhm.
And then, in that book, he talks about I write down 3 wins for the day, and 3 goals I want to achieve for tomorrow, right? So sometimes the gap, the stuff you didn't complete, okay, well let's put that on paper, and we can complete that tomorrow or next week, or so.
Have you ever heard the phrase, you're the average of the top 5 people that you hang around? Well, real estate agents, I'm excited to increase your 5 with you. We're launching the Real Freedom Investor Agent Tribe to help you get educated and connect with others to build your real estate investing journey, and also to help you along the way as you're working with real estate investors. So come check it out on our website, realfreedom.com. Go to the store. We have a membership, we have a mastermind group, and private coaching to help you stay accountable to your real estate investing goals, and to make sure that you connect with like-minded people to accelerate your progress and to cheer you on along the way. Check it out, realfreedom.com. Click on the store. Cool. So for people that want to learn more about you, Jarod, and Optimal Equity Group, how can they do so?
I think the best way is just to go to my website, which is www.optimalequitygroup.com. There I have all my social media links. You can schedule a call. Of course, I'm on Instagram, Facebook, LinkedIn, so you can look me up there as well. But yeah, always happy to have a conversation. I love talking about this stuff. My wife really likes that I'm involved in like these podcasts and networking events, so she doesn't have to hear it all the time.
Give you an outlet for your excitement, right?
Absolutely, yeah.
Yep. So I have a wife that loves what I do and loves the fact that she doesn't have to deal with that, So yeah. She's a therapist, totally different industry, and she's like, "You like real estate? Great." And she's got confidentiality, so she can't talk about her job with me, but at the same point, yeah, it's a great outlet. So I agree. Yeah. Well, thank you so much, Jarod, for coming on. For those of you listening, yeah, if you want to learn more, go check out the website. But thank you so much for sharing your information and your story, and hopes to inspire others that they can say, hey, I can do this too. And if syndication is something I want to pursue, here's kind of the steps of how I can do that. So thanks so much, Jarod, for coming on and sharing.
Awesome. Thanks, Mike.